We have a lot of people on this webinar, everyone listening in, so we're going to give it one more minute here. Let everyone get registered. People are jumping on as we speak right now. So just one more minute here and we'll go ahead and get started. All right, good morning or good afternoon, depending on where you're on the country. My name is Josh Elohim. I'll be your speaker for today. For the purposes of this call, some quick housekeeping. Everyone's going to be muted for the purposes of the call. There is a chat box. There's a questions box on the right-hand side. Please go ahead and ask your questions. We will do a quick Q&A session at the end. If you already have an account, great, sit back and relax. If for some reason you don't have an account with Back9 Insurance, it's 100% complimentary, but you can go ahead and sign up on the chat box on the right-hand side of the screen there. Go to your chat, you'll see a link in there for you can go ahead and sign up. I'm gonna take my picture off here. I just wanted to say hello to everyone. I wanna make sure everyone's safe across the country, most importantly. Today's webinar is gonna be on selling IUL or Indexed Universal Life from the house. So I'll go ahead and take this screen off here. And let's go ahead and get started here. So hopefully you all have Back9 Insurance accounts. You're somewhat familiar with this. I'm not going to spend a ton of time going through quote and apply in general. The goal is to get right to the Indexed Universal Life as soon as we possibly can here. Again, thank you so much for being on the call. We're in some very interesting times right now, as you all know. Times we've never seen before. So people have asked me a lot about coronavirus. How is it affecting underwriting? I'll just give you a quick 30 seconds here. A lot of the carrier, clearly if you have the coronavirus, you're not going to get approved right now. It'll be a postpone or a decline until they kind of see the effects there. If you don't have it, you can get life insurance. Pretty straightforward. They might ask you more, maybe a health questionnaire at the end of the process to see if anything has changed. But you can get life insurance. People are panicking and buying life insurance as we speak right now. For us as a company, we've had the most applications we've ever had in the history of our business last month, and we don't sell anything. We work with agents. We work with you. So you're obviously selling more life insurance right now. If you're not selling more life insurance, then this probably because you're not using quote and apply. So let's get right into this here. You guys probably already know quote and apply is it's basically the first ever multi-carrier agent and or consumer facing e-application for life insurance. I know it's a mouthful, but in essence, we give agents a link, a landing page, a website. It allows you or your clients to run life insurance quotes in seconds and then apply in minutes. So just to give you a heads up, that's what this is here. So let's go ahead and this is what this looks like. I put my client's first and last name in, and then we ask some really difficult questions, right? I'll pick on myself here, male. You put your client's health in, 5 hearts is preferred best, 4 hearts is preferred, standard plus, standard. So I pick my client's health. Everything we're doing here can be done by the agent or also 100% by the client. Before we just used to ask a smoker, non-smoker question, but as we know, people are smoking different things now. So what are you smoking? And then how often are you smoking it? You can also hit never if you don't smoke. Another big thing that knocks your clients out of their preferred best health class is height weight. So if you're 5'9", 300 pounds, you're not going to get the best health class. So if you're willing to put it in there, go ahead and put it in. If you pick 5 hearts in the beginning, it'll take you back down to the 1 heart or standard rate class. It is a personal question, so you can skip it. You throw your client's date of birth in there, and minus us talking, you get rates. We want to give people what they want right away, not make them have to look for it. But the whole focus today is to really focus on the Index Universal Life, or IUL. Again, if I see people getting on right now, if you just joined the meeting, if you have an account, great, sit back and relax. If for some reason you don't, there is a link in the chat box to go ahead and sign up there for an account. Again, it's 100% complimentary. So go to the chat box, click on the link, and you'll have your own account that you can start using right away here. So let's go ahead and pivot here to accumulation IUL. I'm just going to push this button. I'm going to pause for a second. I'm going to start with the problem. What is the problem? The problem is a lot of us are guilty of this as Americans, but we're not saving money. Guilty as charged here. So that's really the challenge. And you may not remember something. Our parents and grandparents had something called a pension. You ask a millennial what a pension is, like, is that an app or what is that there? So if we don't have these savings accounts, these retirement accounts, then unfortunately, millennials are going to be working for the rest of their lives, and a lot of other people as well. So that's really the challenge we're facing here, is that people are not saving money. So Index Universal Life Insurance, to keep it really, really simple, it's basically it's based on the S&P 500, and then the product has a cap and the floor in the product, to make it really, really simple. So the way this works is whatever the S&P 500 does for that year, that's what your policy gets credited to your account. And then to take it one step back, life insurance carriers did not have IUL, years and years back. They had variable life insurance, which you may or may not be familiar with. That variable is great. Market does 20%. Your client's extremely happy. They get 20% credited to their account. Here's the challenge. Next year, the market does minus 20%. Now your client's absolutely devastated, and it's very hard to recover from a negative loss with these policies. So the life insurance carriers got smart, and they created something called IUL, Index Universal Life. What's used, the same exact scenario. Market does 20%. Your client doesn't get 20%. There's a cap of maybe it's called 10 to 15%, depending on the product. Next year, the market does minus 20%. Now you have a zero floor. So your client's going to participate in the upside of the equation, but not the downside. So they really created IUL to offset the market volatility of the VUL. So hopefully that's a good little background of kind of how IUL works. A lot of agents are concerned. They're not familiar with how to sell this. They don't want to talk about it. It's just there's too many moving parts. So what we've done here at Back Nine Insurance is, again, since we simplify the selling of insurance, we've made this as easy as possible for the most basic agent to be able to do, up to the most advanced agent. What I mean by that, if you said, hey, Josh, I want you to run me an illustration or design an illustration for me where the carrier doesn't really benefit as much from this, the agent doesn't really benefit from this, but really the money goes into the client's policy so we can turbocharge faster. That's what we've done here. Now take a look here. We ask one simple question. How much money do you want to put into this on a monthly basis? As you see here, we can go all the way up to $20,000 and all the way down to $50 a month. Believe it or not, I'm actually more excited that at the $50 a month than I am about $20,000, because you probably have to agree, in the past, IUL was geared towards your middle to upper income earner. So what have we done by going down to $50 a month? We've opened up to the other 95% of the country to be able to talk about this and start saving money here. So I'm going to keep it just at 1,000 just for illustration purposes. I hit the next button. This gives me goosebumps every time I see it, you guys, because I've never seen in the history of our business you be able to pivot so quickly right in front of your client. So there it is. There's the illustration. That's how easy it was to get it done. So we have a few different options on here for you. Just to give you guys a visual of what's going on here, I'm putting in $1,000 a month, doing that for, so $12,000 a year. I'm paying for 10 years. So I'm doing, I call it a 10 pay or 10 years. So most efficient way to fund a policy is max funding it. So 10 years is a great option there. So again, I'm putting in 120 over 10 years. This is like a 41 or 42-year-old. I let that money accumulate to what's called retirement at age 65. So at age 65, I'm able to pull out roughly about $2,000 a month from 65 all the way to 90. That's really as simple as it is. If you look down here, we're running this at a 5.76% interest rate, and this is based on the S&P 500. Believe it or not, a lot of your clients can make decisions right from that information right there. They don't really need to see much more than that. It's just keeping it very, very, very simple. That's what I'm all about. I'm a simple person, so I'm having success selling this because I just really keep it simple. So there you go. That's how it works here. Again, we have another option here, another company. If I want to, we're doing something called a minimum non-MEC death benefit. If you look here, my death benefit's $350. That's pretty low for putting in $1,000 a month. Let me give you the visual. There's the minimum non-MEC death benefit. That's what really makes this sing here. And when I say minimum non-MEC, that means that I'm running this at the lowest death benefit possible without MEC in the policy. We do, for those who are not familiar with the MEC, the modified endowment contract. The beauty of life insurance growing tax deferred and being able to take the money out tax free is really one of the best parts about life insurance. Well, if the policy does MEC, it changes all the rules, and now you have to pay taxes on the first dollar that comes out. So we're running that minimum non-MEC death benefit. There's two very, very important things that happen here to help your client's cash value. The first thing is that because of my death benefit's the lowest, my lowest cost of insurance charges are going to go to the carrier. So that's really important. If I have a high death benefit, it's the higher, again, the carrier's on the hook. So I understand why. If you have $1 million death benefit here and the client dies tomorrow, guess what? You're on the hook for $1 million. The carrier's on the hook. So I understand the cost of insurance charges. So what we're doing here is we don't really care about death benefit. We care about retirement income. So we're lowering that. So that's the first thing that's really important. The second thing is that when you lower the death benefit, it also lowers the agent's commission as well. Now, I'm very transparent about this to the client. So I tell the client, hey, we're not here to get rich off this one policy here. Now, if I sell 20, it might be a different story. We're really here to help the money not go to the carrier, not go necessarily to the commission, but to go into your policy, which simply allows it to turbocharge faster. So we have a few options on here, you guys. You see we have John Hancock, we have Nationwide. We are in the process of adding more carriers as well. So just to give you guys a visual, let's say I wanted to switch it over. There you go. I switch it right over. If you guys look, a few quick things here, we have the illustration right here. I'm not going to go into it yet. I just want to pull it up here to show you how fast it is to be able to go into the illustration. Absolute game changer. If you guys are not using Zoom, hopefully you've heard about it by now. It's a very simple software. There's other ones as well you can use that basically allow you to reach out to your client from home right now and then do what we're doing right here. You can call them on the phone. You can send them a link for a Zoom. You can go through the whole presentation on your phone from the convenience of your home. And then at the last step here, which is to sign the application, you can actually pass the screen to the client and the client signs the application. Absolute game changer. So I want to show you guys a few more things here. So let's say I want to make, this is great, Josh, but I don't want to do 1,000. I can do 500. And then this is the client speaking, by the way. And instead of doing it for 10 years, what about doing it for 5 years? On the spot, in front of my client, I make my changes and I just hit the rerun button. Again, I mean, if the work that went into this, bada bing, bada boom, there you go. You've rerun the illustration, you've made the changes. So that's really how simple it is to I call it dance right in front of your client, right on the spot. So we do have a video here, which I can't show right now because for some reason everyone won't hear it, so I won't show it right now. It is in my email signature. It's basically explaining the benefits of creating non-reportable tax-free income. It's a cool video. It's about 30 seconds to a minute. I recommend blasting that video out to all your current and future clients, and then you can attach your link so they can go right to IUL and sign up. If you look here, we created this click here button right at your fingertips here to talk about how this whole tax-free income part works right here. I call this the bucket sheet, by the way, and it's a great piece we kind of took 3 different marketing pieces from 3 different companies and put it all into one piece. So if you look here, what I've noticed on my side is that a lot of agents go into conversations talking about life insurance or IUL too quickly, and they tend to get the door slammed in their face, if not physically, then mentally. So, but everyone hates paying taxes, right? So there you go. How do I pay less taxes? So this piece shows me some of the top tax income earners for 2018. We'll be updating that, by the way, and it shows how much they're paying in taxes. So if someone was upset before, now you really have their attention, their blood boiling. In California, as you add this up, we're close to 50% here. Again, the reason why I like this piece is because of these buckets here. This is called the bucket sheet. So this kind of shows where my client's money is right now. So if you look here, we have our tax deferred bucket, your 401ks. I'm a firm believer in all three of these buckets. I would never say to put all your money in life insurance. That'd be foolish. So if someone's willing to match you on a 401k, let's call it 6%, you put your 6% of money in there to match it. Great bucket to have. How about your taxable bucket, your stocks, your bonds, your mutual funds? Another great bucket. Where else can you put in $100,000 and maybe earn $1 million? The only challenge is we want to risk to lose it all, correct? So that's the challenge there. Then you have your tax advantage bucket, which is another great bucket, your Roth IRAs. The challenge here is that most people make too much money, don't qualify for this bucket here. So if you didn't have someone's attention before, well, you definitely have it now, because this is where their money is right now. So a lot of clients think about growth. That's what they focus on. They forget about distributions, taking the money out. You see these spigots right here? So, okay, this is great for growth, but what happens when I want to pull money out of these buckets here? Well, if you look here, how am I going to be taxed on these buckets pre-59.5 all the way to 70.5? You have to agree, it's not how much money you make, it's how much you get to keep, correct? So a lot of people don't know that, hey, if I need 20 grand, which bucket am I going to pull it from here? You're telling me if I need money before 59.5, I'm going to get hit with an ordinary income tax plus 10% penalty? It's a real eye-opener to a lot of people. So here's your sale. What if there was a way, Mr. Client, if I could show you how to create non-reportable tax-free income? Well, after seeing how my money is being taxed right now, I'd be interested in that 100%. So here's your fourth bucket that a lot of agents and clients do not know about. It's called life insurance. And most people will say, hey, I thought life insurance was for a death benefit. No, that's called term insurance. So it shows me exactly how am I being taxed on life insurance, 359.5 all the way up to 70.5. And as you probably may or may not know already, life insurance grows tax deferred, and you're able to take the distributions out tax free. The true power of life insurance. So now I'm going to dive into this illustration. I'm going to jump back and forth here, but here's the illustration we pulled up. I showed everyone on the call how to make changes right on the spot there. Because you can pivot like that on the spot, what I'm seeing on my side here is that meetings are going from 4 or 5 meetings to get these things closed to 1 or 2, because I can simply just give you what you're asking for and answer all your questions. And then the next thing I usually hear is, what's next? We know what that means, right? Let's get this done here. So here's my illustration right on the spot here. Let me zoom in a little bit. Perfect, there we go. For those who don't know, you hold down your control button and you move in your mouse there and you can zoom. If you don't learn anything else today, you just got a little tip there, okay? So here you go. I got my male 42-year-old preferred non-smoker. I'm putting in $1,000 a month or $12,000 a year. And then I have my my death benefit, which is my minimum death benefit there. So then when I scroll down here, the way this works, I'm putting out $120,000 over 10 years. I let the money accumulate till my age 65. So in this situation, I have 2 options. I can either have about $250,000 of cash to play with, not bad on a tax-free basis from putting in 120, or if you're going to use this to supplement your retirement, which I think is a great option, I can take out about $22,000 a year. Now, when I scroll down here to my age 90, if you look, I've taken out about $461,000. Now, obviously, we're running this at the 5.92% interest rate. Is it going to happen like that every single year? No. From my experience, the S&P 500 over the last 30 years has averaged about 10%. If you factor in a cap and a floor, you're probably looking more about 7 or 8%. So I feel we're still being pretty conservative here. Because you have that 0 floor, you're protected against the downside. So That's how easy to get into the illustration. Some questions that your client might ask you, some simple ones to be prepared for. The first thing is charges. How do these costs work? So this is a really easy way to explain it. So again, I'm putting in my 12,000 the first year. My policy value is what's growing in the policy currently right now. My surrender value is if I want to take every single dollar and leave. Because we're running this illustration the right way at that minimum non-MEC, normally this is going to show zeros the first 4 or 5 years. But because we ran this the correct way, this is why we have cash value right away here, just so you know. Agents always say, which company should I go with for IUL? And for me, I'm like, it doesn't really matter what the company is. It really matters how you're running the illustration. And that's what we've done here to run the illustration correctly right from the beginning to, again, not benefit the carrier, not benefit the agent as much, but really to benefit your client, the most important person. So a simple way to figure out your cost of insurance charges, take your 12,000, subtract it from your policy value, and that's a really high level of saying, what are my cost of insurance charges? If you look here, life insurance charges are heavily loaded in the beginning years. So if I scroll down here, it's going to be about year 15 or 16. You're going to see my number is going to be the same here. So look, it looks like it's year 13 here. And really, that's what you can say, you know what, my cost of insurance charges have really gone away at that point. Simple thing that clients are going to ask for. That's it right there. Another thing that comes up is that you see this flexible premium contract here, really, really important. This is one of the biggest difference for me for this and whole life is that this is a flexible premium. It's universal life. What does that mean for your client? Well, we're showing a 10 pay here. Let's just say that, you know what, things are going really good and I want to keep paying this year. I could just pay year number 11, no problem at all. I could pay year 12 if I wanted to. Again, this is just a snapshot in time. Vice versa, let's say that in year 5 or year 7, you have a really rough year. It happens, right? And you can't make a payment. Because you have your cash value in the policy, you can skip a payment here. Not the end of the world. Now, it will draw down from the cash and a little bit from the death benefit as well, but we know that things happen. So that client really enjoys the feeling of the flexibility of, God forbid, something happens. So that's something that's really important to understand here. The other thing that people want to talk about is there's a zero column here. Like, how does this zero column work? I can't get past that. Normally, this is on the same illustration, everyone listening. The reason why it's not here is because we show distributions and there's more to it. But normally, this is on the left side of the page here. So what is this zero column staring me in the face here? Well, here's how it works. By the law of life insurance, if there's any gains in a contract, meaning there's any income growth, you have to show the absolute worst case scenario. So that's what this is. I call this Armageddon. Now, unfortunately, some people might say we're here right now, but believe me, we're not even close. But that's the situation here. So there's two things that have to happen in order for this column to actually happen here. The first thing is that the carrier has to charge their maximum cost of insurance charges every single year. It's never happened in the history of our business. The other thing that's never happened is that the S&P 500 also has to get credited zero every year. If those two things occur, then if I scroll down here, at the client's age 65, they would have to put more money into the contract. Again, you're talking about two things that have never happened in the history of our business here. So that's why I call this Armageddon. The sky is falling. If this does happen, we're fighting for food and survival. We're not worried about our life insurance. We're probably on our end days. That's kind of how I explain it with a little joke there. So there you go. That's going to come up. It could come up. The other big thing that comes up is this whole tax-free income. That's a great area. Like, how does that actually work? So let me give you a visual here. So the first way, so whatever I put into my contract is called my basis. So in this situation here, I put in $120,000. Hopefully everyone's with me here. Life insurance is bought and paid for with after-tax dollars. So I've already paid taxes on the front end of this equation here. By doing that is what it allows me to get the tax benefits on the back end of tax-free income. So here's how this works. No one's going to tell you this, but this is really how it works. So if I want to pull money out of this account, my first $120,000, I'm going to pull that money out via a withdrawal. It's just like calling your bank and saying, hey, I want to take money out. They don't ask you any questions. So I take out up to 120 via withdrawal. The next dollar that comes out of that contract, now I'm going to switch over to a loan. And you might have heard the terminology become your own bank, because what happens is this carrier is going to charge you maybe 1 or 2 or 3% to borrow the money. But then what they do is they credit you back that same 1 or 2 or 3% year end. So it ends up what's being called a wash loan. Here is the key factor. I'm going to slow down here for a second. As long as your client dies with this policy and never surrenders it, what is the death benefit to the beneficiaries? I'll wait. The answer is tax-free. So that's the key thing. As long as your client never surrenders this policy, they will never have to pay taxes on the gains in the contract. Hopefully that made sense. That's really important. If you do have questions, again, please put them in the chat box. I will read at the end there what the questions are. If for some reason you don't have an account with Back Nine Insurance, you can go into the chat box and you can go ahead and sign up there. So in this situation, John Hancock took it one step further, and they created something called an overloan protection rider. Do you see it right here? Now, we know why they probably did this. I'm sure there was probably some type of lawsuit, right? Client sold them a policy, they weren't around, client pulled all the money out, and then they had a huge phantom income. So take a look here. I really like this rider. It makes me feel warm and fuzzy inside. The way this works here is that, let's just say your client either takes the money all out at once, or the client decides they want to do it over a time frame. At any given time, if this contract is going to cancel, it's going to terminate, this rider will automatically shut the policy off and turn it into a paid up policy. So it's a real safety mechanism for agents as well as clients. Because let's say you sell this to a 1-year-old right now, which is, by the way, the best person to sell it to. That's the sweet spot. I'll explain that in a second. And you're not around when they start pulling the money out. You want them to know how this works here. So this overloan protection rider is a great feature, and that's something I truly recommend there. So let me dive back down here. Now, I show this right to the client. It's totally up to you, but someone might say, what's the downside of doing a minimum non-MEC? Well, there's only one, in my opinion. I'm not sure if you want to call it a downside, but let's say your client says, hey, let's say I take this policy out right now, and I want to put more money in down the road. Maybe I'm on a base plus a commission salary, and I want to plug in more money. Makes perfect sense. The only downside that I would say is that if you look here, this 7-pay premium is the most money possible that you could put into this contract. That's the most money right there. So really, I can put an additional $3.86. That'd be the only thing I'd say, because we're running this at such an efficient manner right now. That's really the only downside, in my opinion, that's going to that could really hurt you doing it this way. I also show the client, look at this. Hey, what am I getting paid on this, Mr. Client? Here's my target premium. Now, as you may or may not know, normally when you put $12,000 in life insurance, your target's about $12,000. Well, if you look here, it's going to be less. So again, it just makes the client understand that you're not here to try to take advantage. You're really here to do what's right for them. And that tends to make them want to buy. And again, you sell many of these policies here, then you can really, you're really helping your client most importantly, but it's also a great option for you. So why this has been around for a while. This is not really secret here. This is really just compounding interest. You may or may not remember that in your accounting class in college, the professor said, if I put in $1 a day from 18 all the way to 65 into a bank, I'll be a millionaire. I don't know about you guys. I didn't listen. I don't know about you guys, but I should have listened though. That's really what this is, just money growing on top of money. It's very simple. So, okay, so your client's like, this is great. You've gone through a few scenarios. Like, this is great. And if they ask any more questions, what I try to do is I try to go back and forth. So let me ask this question one more time, Mr. Client. If you need $20,000, if you need 20 grand out of what you currently have right now, which bucket do you want to pull from? And I show them the buckets again, because we're visual people. That's how we learn. Okay. And they're like, well, I definitely don't want to take it out of here. Well, this is the bucket you want to take it out of. So what are we really doing here for our current future clients? We're giving them access to a fourth bucket they do not have right now. Extremely important. I don't believe in putting all your money into life insurance, because the other thing, I call this a forced savings account, but I also call it diversification. Again, I'm a firm believer in these buckets here. All I'm saying is that we need to help our clients create that fourth bucket that they don't have access to, which helps you to grow, to create non-reportable tax-free income. Hopefully you guys can hear I'm very passionate about this. I feel like it's a big challenge for a lot of people. And if we don't address it, unfortunately, people are going to be working for the rest of their lives here. So, all right, so let's wrap this up here. This is great, Josh. What's next? We know what that means. It's a buying sign, right? So I always joke around and say, hey, it's great that you like, in this situation, John Hancock, but guess what? They want to date you as well. They have some questions for you, meaning an exam and an application. So normally, this is a pretty long app right here because it's IUL. I know you guys love your 50, 60-page paper applications. Well, all I do now is I hit the apply button. It brought me right into the application. This is available in all 50 states. So here you go. I'll run through this very quickly. I put my client's email and phone number. Two very important things are going to happen when I hit the next button. The first thing is that whatever email you put in, that client's going to get an email letting them know when an application has been started. So maybe you're not on Zoom for some reason. You can hit this next button. They get the email. They can actually finish the application themselves. Second thing, let's say you take your link and you do a marketing campaign on IUL, which I'll show you how to do at the end of our webinar here. Someone clicks on it, runs a quote, and applies. You probably want to know about it, correct? Absolutely. So when I hit this next button, you're going to get an email as well. Okay, I put the first part of my address in here. You see how all the information just auto-populates? We pull from the computer's IP address. It's scary and cool all at the same time. Okay, so we added a few new features here. Is this person insured? We talked about doing this for a child. Well, why is a child such a great person? Because they have time. That's the most important thing. So your sweet spot with IUL is really your 1 to 50-year-old because they have time. Obviously, 1 being better than 50. So if for some reason you don't have income, you can put it here, a student, and then you can use the parents there. Let's say that this is a person who is employed. I'll just put in some basic information. We'll do back 9. We'll do sales. I put in my company address. Auto populates. Perfect. Will this in person be will the insured own the policy? If yes, if no, you can go ahead and plug in the information who's going to. If yes, okay, will it be owned by a trust, by a business, or individual? So that's an option there. Just to keep it easy, we'll say individual. We'll say Mrs. Doe. We'll say this is the wife, and we'll save that. I can split up the beneficiary 50-50 if I want right here. Let's keep going. I can add a contingent beneficiary to back up the primary. At this point, I would just put in some income, some assets, some liabilities. This is a ballpark figure. Driver's license number. And put in the state, and we're moving along here. If the client has any existing life insurance, I would just add the policy right here. Let's just say no for now. I know it's kind of crazy, but we're almost finished. Look at our status bar. If I didn't put that height weight in the beginning, I'm going to plug it in now. So I'll just pick on myself here. Run through this. I got to show this to you guys. I can't hold off. How many of you have issues with APSs, annual physician statements? I'm sure everyone's probably raising their hand right now. At some point, you've had an issue getting these things. Just recently, a couple years back, a lot of these big facilities have made it mandatory that you have to have your medical records online. So if you look here, all I do is I pick my facility on the spot here. If it's not there, I can type it in. I'd say 80% of facilities are there. If it's not because it's a mom and pop shop and they don't have the same rules. Let's just say it was Kaiser, which in California we call the kiss of death here. I plug in my email, the client's username, and the client's password, and I hit the connect button. We're able to pull those medical records instantaneously right on the spot. It's been an absolute game changer for us. If for some reason you forgot your username and password, you plug it in right here. You can also, if you don't have an account, you can create an account. It's not the end of the world if you say no to this, because guess what? Let's say a week or two goes by and then we ask for an APS after. We're going to do the same exact process while using our normal copy service. So I'm just going to run through this. I know most of the answers are no here. I had one agent from New York say, can we get one button that says no for everything and call it a day? I was like, I love the way you're thinking. The carriers will never go for that, but I do like the way your mindset is. We do have guaranteed issue on here, which is very few questions. So that's probably the closest you can get to one. But again, I mean, this is a, this is a IUL policy. So there's definitely some moving parts to it. So just like that, We just answered all the medical questions. So we work with a lot of captive agents who are trained to collect money. I think it's a great idea to lock the client. Here you go. You can put in the routing number. You can put in the account number. So it does not bill the client right now. All it does is just fill out the EFT form, so you don't have to go back and ask for it again. You can also say no. So we got 2 more steps and we're done. How many, by a raise of hands, have had issues with exams? From the examiner to the client to the agent to the GA, a lot of things can go wrong, right? So if you look here, this is a live calendar from exam 1 based on whatever zip code you put in across the country of real times that are available to set up your exam. So let's say I want to lock in this 6 a.m. schedule here, right? I want to get it over with early. I hit schedule. I hit yes. We just booked the exam. It was that easy. So if you look, the calendar gets an exam, right? An email right to their calendar Outlook. And then the examiner also calls the client a day before to remind them of the exam. So ever since we've implemented this new system, our exam completion ratios have gone through the roof. And you can probably see why. I can already see a question. Are they doing exams right now? So a lot of the carriers have bumped up their amount they allow for no exam. For example, Principal does $1 million. John Hancock bumped theirs up to $3 million. So if you're concerned about an exam right now, what I would do is just hit, as long as it's not a $10 million death benefit, I'd say if it's $3 million or under, just go ahead and when you get to this point, just go ahead and you can actually click a button that says to not do the exam and just have them call me. And then what we'll do is we will try to get through underwriting right now with no exam. If push comes to shove and they really need it, we'll let you know about it. But I'd recommend that for smaller cases if you don't go with our no exam option, okay? Hopefully that made sense there, and I'll answer that question again in the chat there. So last step here, I want to sign. So hopefully if you're using Zoom, you can hit sign now. If for some reason you're not, you can sign via email. Let's say you're face-to-face when we get back to reality, or you're doing this over the phone, or the client's doing this 100% by themselves, you just hit sign now. And just like that, all the information auto-populates the DocuSign. And you got yourself a fully completed application here. So I'm sure you guys are all familiar with DocuSign. There we go. It just took a second there. A lot of people are doing life insurance right now. So there you go. There's my fully completed, 40, 50 page application. You guys see how long this app is? So hopefully you're all familiar with DocuSign. Typically what I do here if I'm on a one-on-one meeting with an agent is I pass the screen to them. And what I do is I let them sign the application. So to make this real, that, hey, I can actually do this by myself. I'm from home with my clients. So I pass the screen at this point. Zoom is a free account. It's they don't charge you for it. We don't get paid to advertise it. I just want to let you know I'd recommend going to Zoom, setting up an account, and then you can use the pass the screen feature. So you pass the screen, the client takes over, they hit adopt and sign, and we're at the end of the race here. I'm sure you all know how to use this. I'm just signing the application. There we go. So when I say sell life insurance, there's the illustration, by the way, right there. Welcome to the future where life insurance is heading. So that's really the process right there. And just so you know, the most important person in this conversation is done, which is the client. They don't have to do anything else. You're going to receive an email from DocuSign for you to sign the application once the client signs. You're going to put in the last 4 of your social, you sign, you do your agent report, and you're finished. Once you're done, all the information goes into what's called your BOSS system. This stands for Back Office Support System. This tracks all your business from submission to commission. Now, because of time here, I want to let you guys go here very shortly. Because of time, I want to show you here, you have a marketing feature in the BOSS. So I go here, I go to marketing. So it's going to pull up, look, we've hand-created 7 different templates for you to pick from. What we've noticed on our side is that up to 80% of agents don't have like an email service, like a MailChimp or Constant Contact, Salesforce. They don't have it. So the challenge that we ran into is that we're seeing a lot of agents get very excited about quote and apply. When they get off the phone, nothing happens. So we're always puzzled, like, how is this possible? This is why we realize that the message is not getting to your clients. This is why we created this marketing tab here. So again, we have tons of options from business life insurance, final expense. This is our IUL, get started in future retirement. Policy review is one of my favorites. If you have a lot of clients, this is a great way to reach out, non-threatening, not talking about selling anything, just doing a review. Life with long-term care rider, new mortgages, and then no exam. I'll just go with the topic for today, which is that get started on life. You click on your campaign, it pulls it up here, and there you go. When you save properly, that's where you go to. That's where when you retire right there, right? I can already see myself there already. So look, when I click on this link, it goes to your custom link. And then if you want your picture, and all your contact information will be there. So here's how simple this is. If you look here, look at my email recipients. I can put up to 100 emails right here on the spot. Extremely simple. So if I'm going to put more than one, I want to separate it by comma. Really important you do that so it goes out correctly. I'll just pick on myself here. You put your email address, you scroll to the bottom, you hit send email. Can we make it any easier than that to reach out to your clients right now? So your clients are panicking as we speak right now. They're home and they want to buy life insurance. You're at home, you can't do much. That's an easy way to reach out to them right now as we speak. Quote and apply is the bait. The net is this marketing feature right here. So let's say that you do have, you're amongst that 20% of people who have their own CRM tool, email blast system. All you do is you go to this copy button right here, and you can use any of the campaigns I just showed you in your ecosystem there to send out. Obviously, yours is better because you can track everything. You can do a drip campaign, do one email at a time. Totally up to you. So that's what I have here for you guys. Again, I'm hoping you take full advantage of it. Selling IUL has never been so easy. Reach out to your marketing manager if you have questions about how this works. They're here to help. If for some reason you don't have an account, you can go ahead and click on in the chat box there, and you can set up for your complimentary account. I'd love the chance to help you out. For me, for all of my agents on the call here, I'm always happy to help you get on the phone for your first few calls. Jump on a Zoom and help you do this with you / for you. I'm sure the marketing managers here will do the same. Get you on the call, get you comfortable. I just did this yesterday with an agent. Hopefully he's on the call right now listening. But I just did this for an agent yesterday. We got on the phone with the client, and the client went through and they bought a policy. So we're here to help. You're all smart people. You're fast learners. So again, if you're for some reason you don't have an account, hit the chat box there. Now it's time for questions. Thank you so much for your time. I really appreciate you listening in here. Answer your questions now. We'll ask them. And again, thank you so much. Everyone have a blessed, safe day. Here come the questions. See if I can go through these and read some of the most important. They're coming in so fast, I can't even. Okay. So obviously, as someone asked, is it record? If this is being recorded, it'll go out to everybody. Pretty straightforward. Someone asked, is there a place we can go and practice where we don't do DocuSign? The answer is yes. So this is our practice site right here. If anyone wants it, intelligentquote.com. You can run through this. You can't make any mistakes. It's not real. You can set up as many exams as you want. You can DocuSign as many times as you want. Maybe jump on a Zoom meeting with your friend and practice right here. Simple way to do it. Obviously, when you want to go to your personal link, you click on it, launch quote and apply, and this is real now. So that's a simple way to go through and practice. That's a great question. Let me answer a few more here. So here's a question here. So someone asked about, does the exam part come up if it's a non-exam? The answer is no. We skip right over the exam step. So if you go with a company that's not going to ask for an exam, it'll just skip right over that exam step. What I'm recommending to you is that if, let's just say that it is asking for an exam, you can try to just have them call and then see if we can get past the exam, because a lot of the carriers are trying to do their best to not have to ask for an exam right now because of the current situation. So someone asked, can I add an LTC rider to that life insurance, to IUL? The answer is yes. I don't recommend doing it on the cash value option. We do have an option that's protection IUL. That's if you're going to add it, because the challenge you're running into is we're doing that minimum death benefit. So minimum death benefit means the lowest death benefit. And then the challenge you're going to run into is that you can't add an LTC rider to, we do what's called we increase death benefit for the first 10 years. So I would add that to a protection IUL, where you're solving more for death benefit now, where the gear, I wouldn't put those together into one though, if that makes sense. Just a few more here, I'll let everyone go. One question that always comes up is that some of you might have current relationships for GAs. I get it, that's absolutely important, relationships. We do something called dual contracting. So you're able to use the software right now. After you've done your contracting packet, you can use your software. Once an application comes in, all we do is we set you up with a completely separate code. So you don't have to worry about calling your current relationship and having an uncomfortable call. That's important. And we also do something called just-in-time contracting, meaning that we don't just blast out your contracting packet to carriers. We wait till you get an application and we send it in at that point. So there's a lot more questions here, but I'm going to wrap this up here. Again, thank you so much, everyone. I greatly appreciate your time. Please do me a favor, stay safe out there. We will get past this soon, but use the marketing feature, get it out to your clients. I'm truly looking forward to working with all of you. Thank you so much for your time and have a blessed day.